I think right now is an outstanding time to invest in the precious metals, royalty, and streaming companies because I think they're a great value right now, and these are really, really high quality businesses. In some previous videos on this channel, I've expressed how I'm very, very bullish on Metalla, and I think it's a great company because they have a ton of growth that's already paid for. And the company has seen some of my videos and they're like, hey, we'd like to sponsor a video. So today I'm going to give you some updates on the company, and I'm going to share something in this video that I think is going to blow your mind. And I wanted to quickly mention that on this channel, I'm only taking on sponsors from companies that I would personally invest in myself. Okay, so here's the 5 producing assets that Metalla currently has. They have a royalty on the La Encantada mine operated by First Majestic, and they get 100% of the gold that First Majestic produces at this mine up to 1,000 ounces each year, and in 2023 this brought in 259 ounces. And next you have the El Realito mine operated by Agnico Eagle. In 2023, this mine delivered to Metalla a little over 1,000 gold equivalent ounces, or GEOs as they refer to them in the industry. Next is the Wharf mine operated by Core Mining. On this mine, Metalla holds a 1% gross value return royalty, which is actually a better type of royalty than the most popular, which is an NSR. An NSR is a net smelter return in which you would have to subtract the transportation costs and subtract the smelting costs, and then you would get 1% of what's left over. However, with this type of royalty, that's 1% of the value of the metal that's coming out of the ground, and in 2023, this mine delivered over 1,000 GEOs to Metalla. Next is the Aranzazu mine. Metalla holds a 1% NSR royalty on this, and in 2024, this is probably going to deliver about 1,000 GEOs to the company. And then the New Luica mine, which in 2023 delivered 113 gold equivalent ounces to Metalla, so this is a smaller royalty. So those are the 5 royalties that Metalla has that are already producing, but the exciting part in the Metalla story is what's to come. They should have 3 new royalties that are coming online this year, and then also many more in the coming years. The first really important royalty coming online from Metalla this year is G Mining's Toca mine. The people behind G Mining are excellent mine builders. They build almost everything on time and on budget, so I think it's very likely that this mine will come online when they say it's going to come online, and it should be reaching commercial production in the second half of this year. And actually, they're going to start commissioning that mill pretty soon. On this, they have a 0.75% gross value return royalty, which, as I mentioned earlier, is better than an NSR royalty. And this says that the average annual GEO production is 1,300, but that's actually over the life of the mine. And the first 5 years is going to add approximately 1,470 ounces of attributable production to Metalla. And at that number, that's a 37% increase in Metalla's GEOs. So that's going to mean a lot more cash flow for the company. Next up is perhaps the most exciting royalty in Metalla's portfolio. And what I'm going to share with you about this royalty is what I think will blow you away. So Metalla has a royalty of 1.35% NSR on all of the Gosselin zone and about 6 to 10% of the Cote deposit. Now, so far in the Gosselin deposit, IM Gold has found 7.4 million ounces. But as you can see in this graphic here, it's open here, it's open here, it's open here, and it's open in the middle here. So right now, the company is thinking that, hey, this is actually not 2 deposits, but rather one very, very large deposit. So they're probably going to add more ounces here, and they're probably going to add more ounces throughout here as well. Because of this, I think this is going to grow to be a lot bigger than 7.4 million ounces in the Gosselin deposit. Although this royalty is extremely important for Metalla and it's a huge royalty, the analysts who cover the company are not giving them much value at all for this royalty. So I want to show you this. This is crazy. Here in the company's presentation, you can see that the consensus NAV, this yellow bar here, for the Cote and Gosselin royalty is $26 million. Now, the reason it's so low is because Gosselin isn't in IAMGOLD's mine plan yet, whereas Cote is, and Metalla's royalty only covers a small portion of the Cote deposit. So just because it's not in the mine plan, they're not getting credit for Gosselin at all based on the average net asset value that analysts are giving it. But Gosselin is scheduled to be included in the mine plan in 2025. And at that time, I think we're going to see a big re-rating in the stock as finally this NAV explodes. I did some calculations of what the potential NAV of Gosselin might be after it's included in the mine plan. So right here, I have the production starting at 200,000 ounces a year for the first 3 years, and then it jumps up to 400,000 ounces a year. Now, this production profile is just a guess, but I have to make some sort of guess to be able to put a net asset value on the deposit. So here I'm trying to look at the NAV that analysts might give Gosselin. So they typically take today's gold price or a little bit lower than today's gold price, and then just assume that will be the gold price for many years to come. And using this analysis, we get a total revenue of just under $227 million with an NPV5 around $139 million. But when looking at the potential net asset value of a royalty into the future, it doesn't do it justice assuming that the gold price is going to stay the same. Now, this makes sense with miners because over time, the gold price tends to rise, but also over time, the mining costs tend to rise. But when it comes to a royalty, over time, the gold price tends to rise and the cost to the royalty holder stays flat. So to come to a more fair net asset value, you should assume some sort of price appreciation. Now, if you look back over the last 20 years or so, well, the gold price on average has increased about 7% annually. Now, maybe we don't want to be that aggressive, so let's do something much more conservative and assume that the gold price will only increase 2.5% annually, which would be significantly lower than what has happened in recent history. So after 19 years, based on this, we have a total revenue of a little over $290 million and an NPV5 of a little bit over $172 million. And keep in mind that this is assuming that they never find any additional ounces at Gosselin, which is highly, highly unlikely because they're spending a lot of money drilling and the deposit is open in just about every way, so they can continue expanding that and continue finding more and more ounces. And this is assuming a very modest price appreciation of 2.5% a year. Now, over time, I think investors will learn, hey, there's a lot more value here than we initially thought. And over time, that the share price will adjust to that. But right now, there is a giant discrepancy between investors' perceived future value and the actual future value of that royalty. And next we have the Endeavor mine. This is a past producing mine that's likely to come back online in 2025, and Metalla holds a 4% NSR royalty on the lead, zinc, and silver. And over the 10-year mine life, the mine is going to produce 9.8 million ounces of silver, 210,000 tons of zinc, and 62,000 tons of lead. Now, at current commodity prices, Metalla's 4% royalty before transportation costs and before smelting costs is about $40 million in revenue. And the third mine that should be coming online in 2024 for Metalla is the Amalgamated Kirkland and North Amalgamated Kirkland mine that's operated by Agnico Eagle. Now, they have a 0.45% NSR royalty on this, and the production is going to be pretty low. So the truth is that this is a relatively unimportant royalty, at least right now. However, Agnico says that it's very prospective to find a lot more ounces there. So perhaps this becomes a more important royalty in the future, but it is one more producing asset that Metalla has, and big or small, adding another producing asset is a good thing. Another potentially very important asset for the future of Metalla is their 2.5% gross value return royalty on Agnico's Fosterville mine, but it's only on part of the mine. So it's not on the part of the mine where Agnico is currently producing. But if you see this graphic here, it's to the left of this red line and to the right of this red line. So it's basically right on the edges of the current mine. But this year in 2024, Agnico Eagle is going to be spending about $20 million drilling to find more mineralized zones and expand the current mineralized zones. So what that means is doing more drilling here to potentially get this mineralization to the other side of this red line where Metalla's royalty would apply. And this is a very large royalty. And also part of that drilling is going to be done right around here, finding extensions to the Harrier zone, part of which has already crossed that royalty boundary. So perhaps in the future, we could see a bunch of ounces here, a bunch of ounces here that are part of Metalla's 2.5% royalty. And this is a huge mine for Agnico Eagle, and it is extraordinarily profitable. So it's in their best interest to find as many ounces there as possible to keep this mine running for many years into the future. Next up, we have the Copper World mine that's being advanced by Hudbay. In early 2024, so basically right now, Hudbay expects to receive the final 2 outstanding permits, and with the higher copper prices that we've seen recently, maybe that means that construction starts pretty soon as well. And on this project, Metalla holds a 0.315% NSR, which would result in annual GEOs of 1,500 ounces. Next is Agnico Eagle's Wasamac mine. This year, Agnico Eagle has said they're planning to spend $2.8 million doing additional drilling here, and Metalla holds a 1.5% NSR royalty, which would have an annual estimated attributable production to Metalla of 3,000 ounces. And keep in mind, in 2023, Metalla's attributable production was a little under 4,000 ounces. So just this one mine would almost double the 2023 production, if you will. Another substantial asset for Metalla is their 5% royalty on Equinox Gold's Castle Mountain Phase 2. And once this is in production, that could be bringing Metalla 5,000 GEOs per year. And this mine is actually already operating in the Phase 1 version. However, to be able to expand it, Equinox is waiting for some permits, and they hope to have those permits within a couple of years. And then you have Sierra Madre's Gold and Silver La Guitarra mine. They're looking to restart this mine. Their permits are in good standing, and they have renewed an explosive permit, so that's coming down the pike as well. And then you have the La Parilla mine that's operated by Silverstorm, and they're hoping to restart in mid-2025. And then we have this 15-mile stream that could start development as early as 2026. This Akasaba West project that's operated by Agnico Eagle is set to reach commercial production early this year. That's not a very big royalty, but every little bit counts. And then you have this Montclair project that's coming out with pretty good drill results. Metalla holds a 1% royalty on that. And then Metalla has other major royalties as well, like First Quantum's Taca Taca mine. And after that's in production, that would be bringing Metalla about 4,900 GEOs per year, which is more than Metalla received in 2023 from just that one mine. And then you have this Vizcachitas copper mine, which after it's in production would be bringing Metalla about 4,600 GEOs per year. And then we have the Camflo project, on which Metalla holds a 1% NSR royalty. This one, like many other royalties, is operated by Agnico Eagle Mines. They had a successful drill program in 2023, and they have another drill program coming up. And this is located just 4 kilometers away from their Canadian Malartic mill, and they think they can process this through that mill that's already built. And that mill is going to be hungry for feed, so I think this is going to be an important deposit for Agnico Eagle. And then you also have Agnico Eagle's Detour DNA project, on which Metalla holds a 2% royalty, and they're getting some really good drill results there, like 18.3 grams per ton gold over 12.6 meters, and then 6 grams per ton per gold over 22.4 meters. Really great drill results coming from the Detour DNA project. As you can see, Metalla has a whole lot of royalties on a lot of different projects that are being advanced. And since there's so many different ones, it's hard for analysts to keep track of all of these, so they end up not getting any value for a lot of them. But anyway, I think today Metalla is a really undervalued, and as you can see, their GEOs are going to be expanding a lot in 2024 and beyond. So I think it's definitely a company that's worth looking into, and I'm happy to have them as a channel sponsor.